Hello to those people that are first through the gate. We'll just give it about 30 seconds while people log on, and then we'll get straight to it. We've got a fairly short and snappy sort of session for you today, just to highlight some key themes. So we'll move at a decent pace, but obviously every situation's individual. So there'll be plenty of time to talk to us at a future point if you'd like to expand the discussion a little bit. Okay, so there's a good number of people in. I'm just going to give it 20 more seconds and then we'll get straight to it. Okay, I think that's a good point. Good morning and welcome to our webinar focusing on cash flow in the SME sector. I'm not sure I like the words SME, but you know what I mean. This is a big topic. So we'll be looking at some common themes in this section today with the help of two very experienced CFOs, Chief Financial Officers, Helen and Justin. Just give us a wave, Helen and Justin.
Hi there.
My name is Andy Collier. I work at the CFO Centre. We provide fractional CFOs, which is the modern word, to help businesses that could really benefit from a skill set and experience well before most other companies could actually access that skill set. In my role, I've met several thousand business owners. I wouldn't like to add up the number itself. And I talk to them about what they want to achieve from their business and actually what the business can do for them as well, that whole sort of mix. There's often one of three things immediately on their mind. It's immediate cash flow issues, today's topic, obviously. It's about wanting to grow and something's holding them back a little bit. Or it could be about planning for an exit or succession. One of those three things is usually really front of mind. But as we get talking and we talk through their business and their plans, the really interesting thing is that cash flow and cash management actually impacts on all three of those things. If you want to grow, you'll need extensive plans around working capital or longer term funding. If you want to build towards an exit, cash flows are massively key to valuation and a great deal, really, almost as important as profit for a lot of people. So you'll have probably heard of the old saying, which is old and been around because it's sort of true. Turnover is vanity, profit is sanity. But there's a third missing element, really. And the missing element is that cash flow is reality. So there's sort of three lines to that little ditty. Many of the entrepreneurs I meet often tell me they're reporting profits, but where's my cash? I just can't get to grips with where's the cash? My profit's going up. I've less money than before. Our CFOs here today know the answer to that and an awful lot more in the world of finance. Please drop any questions or add any comments into the chat function. It's a short section, so we may not get to all the questions on screen, but we will come back to you individually if you've got something you want to talk about. We're going to go to Helen Abbott first. Helen, would you just give us a quick intro about yourself, but then talk us through your general observations on cash flow and cash flow management, and then maybe we can get into some specific case studies and examples.
Absolutely. Thank you, Andy. I'm Helen Abbott. I work as a portfolio or fractional CFO, working with kind of ambitious founders and business owners to help them scale sustainably and ultimately achieve profitable exits, because that is really, what most people want to do. Why do I do this? I have for many years because I love helping lots of different SMEs, and it allows me the flexibility for my four children to be there when I'm needed. So personally now I manage a portfolio of clients and I support multiple businesses in their journey. Over the last few years, I've worked with businesses turning over anything from 500,000 to over 10 million across industries like e-commerce, retail, services, even visitor attractions. And what they all have in common was this clear need for financial direction, but particularly around cash, because cash is the lifeblood of every business. So in my own career, I've helped turn around loss-making businesses into six-figure profit machines. In under a year, I've improved cash flow positions by hundreds of thousands of pounds. And I've helped those founders that I work with go from that sort of stressed and stuck, not sleeping, to strategic and scalable, which is where we want everyone to be. But none of this work will happen without solid cash management. So today, the aim is to give you a clear and practical kind of toolkit that you can use in your own business to sort of give you a little bit more confidence in your cash flow. Just no fluff, just strategies that work really. So the one thing I find very consistent with clients is that you have to manage your cash flow really well to become a successful business. Do you have consistent sources of cash, ideally generated internally, to fuel the growth of your business? Because you cannot get through a day in business without cash. And that becomes even more critical as that business grows, because that growth sucks your cash. Or you can put that another way, cash is the oxygen that fuels your growth. The key is to find new ways to generate sufficient profit and cash flow internally, so you don't have to go to the banks or the sharks to fuel and fund your growth. So I always say to clients, ask yourself this question: how fast can your company afford to grow? And choose one cash improvement initiative every 90 days. So successful companies, by choice, keep 3 to 10 times more cash reserves than their competitors. And that allows you as a growth firm to weather those storms. Bill Gates mandated in the early days of Microsoft, you should always have a year's worth of operating expenses in the bank. And if you've ever struggled to make payroll one month, you would never want to experience that kind of stress again. So how do you start to unlock cash in your business? Where is that cash hidden? So, how could I identify straight away where that cash is hidden? I would start with a rolling 12-month cash flow and balance sheet review. Look for excess stock. I've worked with businesses holding, maybe 100,000, maybe more in slow moving stock, which you could convert into cash, but through a clearance sale or bundling, etc. I've worked with, service businesses who've forgotten to invoice for completed work. You can look at your software subscriptions, because across different departments, there can be multiple duplicated tools that are a lot, across all departments, and you can cut that. I've looked at unused direct debits. People have left and they haven't just sort of stopped the managed service desktop direct debit, etc. for those people. There's all sorts of areas that a simple spend audit or a supplier review can look at and expose those cash leaks. I'd start to forecast, you can use software to do that, like Float or Spotlight, or you can just use a simple Excel model, and you can start to model cash weekly. I'd also start a scenario plan. What if a major client or a key member of staff left? What would happen? So create a 12 or 13-week rolling forecast, which you update weekly. And this needs to be the heartbeat of your business. Another method would be to build stronger credit control. Credit checks before you're onboarding new clients. Payment terms agreed in writing up front, ideally with deposits if you're that kind of business. Automated invoice reminders, and maybe a series of escalating emails if cash isn't coming in. And I've also gone into businesses and I've said to the receptionist on Thursdays, could you ring up everybody on this list? You need a dedicated person or a day of the week for those credit control calls. And for your late payers, you set your expectations early. Add polite but firm terms in your contracts, chase them proactively, consider incentives for early payment, and make your automated reminders like persistent, professional, but consistent. And yes, should you charge interest on late payments, you're legally entitled to. And even if you don't apply it, including it in your terms and conditions will give you that leverage. So, your customer and supplier terms are really important and they protect your business. So I'll give you a real world example or two of where I've worked and helped read cash flow. I've worked with a UK-based SME in consumer goods. The turnover was about 4 million and they were expanding rapidly, preparing to launch in the US. The founder believed growth would solve all problems. Instead, it nearly collapsed, and the founder was blindsided because they had no idea how bad the situation really was. So what kind of went wrong? Well, they started to overstaff without any return on investment. They hired new people in ops, in marketing, in admin, customer support. I even found somebody who was a TikTok specialist. And they were hiring ahead of forecasted growth. They hadn't proved the demand yet. So the monthly payroll was jumping from 45 to 78K like overnight. And when I started to look at the roles, there was duplication of roles. And as I said, one I felt was completely unnecessary. There was excess stock. I think they were carrying about £600,000 worth of stock, but over 250,000 of that was slow moving. They had no data-led reordering system. They just did it on gut feeling. And to prepare for the US launch, they'd ordered £200,000 worth of stock from China before they'd even set up a sales pipeline. So I went in there and while looking through the books, I discovered about £200,000 worth of unrecorded purchase orders, where they'd actually been placing orders in China and they hadn't hit the books. So the real reason they were running out of cash was quite a lot because of the vanishing controls. There were no controls in place really. And they were taking on these kind of payday loans to buy the excess stock. And then they were having to pay back a percentage of their sales going forward. So they were worsening the cash flow position without even realizing. So they were looking at a new US warehouse. They were about to sign a lease and prepay 6 months rent. They hadn't even thought about the international shipping and the duties. They'd not fully costed or planned for any of that. And the reason they were wanting to expand into the US was because they had declining UK sales and increased costs. And I looked at that and I could see they'd probably been running insolvent 2 or 3 months, and taking on loans to kind of cover that. And they were going to run out of cash in a matter of weeks. You know, they were missing VAT payments, they were missing payroll, you know, the morale was starting to go in the company, the supplier trust was starting to plummet. So I got in there and immediately, first thing I did was cash flow forecasting. I built a 14-day rolling cash flow forecast, just simply in Excel, and I updated it daily. I mean, probably hourly. Every inflow and cash flow was tracked in real time because we were in a very precarious position. And I almost created a payment triage system. It was anything non-essential. Like we got paused. We called suppliers. We negotiated terms. We communicated clearly to protect all of those relationships. And of course, there was all sorts of things I uncovered going through the books, unrecorded purchase orders, obviously that I talked about earlier. And there were many invoices that there were no accruals for. That for about 6 months later, I was still finding. I was like, what? Where did that one come from? You know, because nobody was in control. I let go of about 10 non-performing hires. I merged roles, brought in part-time freelancers, paused all future stock orders, ran clearance promotions, freeing up a few £100,000 worth of cash there. Introduced like demand-based reordering tied to the sales velocity, which wasn't done before. It was all done on gut feel. So created a massive spreadsheet, massive cash flow spreadsheet, which then linked into the sales velocity, which linked into what they should order. And the US expansion delayed that by 6 months because I said if you do that now, your business will collapse. And we shifted to a 3PL fulfillment to test orders rather than committing to that big time lease and stock. And as I say, that daily cash flow forecasting and negotiated sort of payment terms with HMRC. So the outcome of that really was that the monthly cash burn was reduced by thousands of pounds. Their cash runway, which they had, was extended from just a couple of weeks for probably 2 or 3 months. So that, made everybody feel a lot more comfortable. And we restructured that US launch. So there's much less risk and we had clearer return on investment goals for it. And the message here from that kind of, scenario was growth without control will kill your business faster than stagnation. Hiring people and buying stock should follow your sales, not the other way around, because that future potential doesn't pay today's VAT bill or your payroll.
Brilliant. Thanks, Helen. I have a couple of things, just either questions or reinforcement on that, which just jumped out to me really quickly. Sounds like part of the answer to the people that it's like I'm making profit but have no money. The answer is often in the warehouse, of course, isn't it?
It's
It's often
always
tied
tied
up.
up.
It's dead money in stock, so I understand what you're
Absolutely.
saying there. And it feels like there's something here. I think the traditional response often is, I need to borrow more money. I need to go to the bank. I need to go to I get cash. I'll get a PayPal loan. I'll go to Funding Circle in the old days, whatever that is. But actually, there's sort of a logic that says in the area of working capital, you need to work your existing capital first because that's the cheap bit before you
Yes,
look at like expensive loans. So those things just jumped out at me completely, really. And then the last thing was just like making sure when you're managing cash flow, you're linking in the whole business. So, as a CFO, you'll be talking to the sales team and you'll be talking to the ops team. And there's just one
absolutely.
version of the cash flow truth, really, which that link is really
Absolutely.
important.
Yes. I quickly,
Fabulous.
within one day, quickly became the oracle. You know, everybody was like talking to me, how much can I do? What can I do? How much can I spend? Every single piece of paper had to come through me to make sure we were in control.
Yeah.
That's kind of, when you're in that kind of state, that's what you have to do. Um,
Yeah.
bring
Fabulous.
control.
Super. Thank you. As I said, today is a very much a high level, and you probably find it's like, oh, that's me type of moment because we'll explore these common themes. Thank you, Helen, for the moment. And welcome to Justin. Justin Phillips, our second CFO, also vastly experienced and also heavily involved in cash flow and cash flow management. Justin, good morning.
Good morning, Andy. Thanks, Andy. Thanks, Helen. Learned a lot from that myself. Thanks, Helen. Yeah, Andy, having spent sort of many years having qualified as an accountant, and then I spent a lot of time in different industries. Having done initially worked at a big corporate like Walt Disney for many years, where cash isn't really on your radar because they've
Mm.
got plenty of cash. So didn't even cross my radar. And it was then I joined an events industry. Spent 27 years in events and then music festivals. So the events industry, running my own company with a chairman through the glory years before any recessions, pre-2008, cash was fine. We made 3 acquisitions, um, had lots of reserves, didn't really focus on cash. I mean, I've learned a lot from my own mistakes or my own naivety and over the years where I am now. And then 2008, when the banks went down, and then 12 again, recessions, all these events, these exhibitions at Earl's Court, Olympia, NEC, they just cancelled overnight, and our order book cancelled overnight. So it was, I mean, we luckily we had cash reserves, but it was pure luck, hadn't planned for those moments. So one thing I will come on to in a minute is, as Helen mentioned earlier, just stacking those reserves away to plan for COVID recessions because they do happen and they will happen. We can't ignore that. And then by the latter years, or 10 years, I did music festivals, which again I'm going to talk in a minute about specific examples, seasonality of cash where you get a lot of money up front, you think you've got loads of profit, loads of cash without planning ahead. And again, I learned from all those things, COVID especially. So a bit of a cash flow veteran for good and bad. Then I really wanted to, when I joined the CFO Centre, help small, medium enterprises, small companies, with people I like, and not working in a horrible festival industry, music festival industry where no one had each other's back. So working for clients who, in different sectors, media, entertainment, production companies, I've got a variety of clients who all have similar issues around cash or didn't have focus on cash. So the first thing I do when I go into a client, and I may be anal about it, and what you've got to do as owners or people have to do, even if you don't like a spreadsheet, as Helen mentioned earlier, I still use old-fashioned Excel spreadsheets, and I'll do weekly cash flows or monthly cash flows for every client. It's the first thing I do when I lift the bonnet when I go into a company is they might think we made loads of profit, we haven't got any cash, we've got loads of cash, and they're not making any money. Cash is really very confusing and people don't really understand it. And that's not me being rude. I think until you have a detailed cash flow model, whether it's weekly or monthly, I prefer weekly to begin with, because then you can flush out things like, are you collecting the money? Have you invoiced everything? One of my production companies deals with a client in Qatar. They suddenly changed the payment terms from 30 days to 95 days. Are we prepared for that? Have we got all the purchase invoices on the ledger? Because clients look at it and go, oh, we owe £50,000, but there's POs of another 100,000 that they don't know about. So capturing all the information, and it is as anal as an Excel spreadsheet or automated, whichever way you want to do it. But I believe getting into every line and understanding it. So planning with every client, every income line, every cost line, HMRC up to date, just check everything. And then you put in prudent forecasts and you can work out any issues. So taking it to two specifics, as Helen did earlier, and this is from personal experience as well, kind of linked seasonality of cash for specific companies. I ran a festival company for several years where you would sell your tickets in November for shows in the following summer. So you could have, millions of cash tied up, um, and use it. And ticket agents in those days, ticket agencies would release the cash before you've done the event, which I'm not sure they do now. But the purpose of this whole conversation around this is don't spend it all in one go, obviously. So it would be I made ourselves ring fence the money for the cost of the events, which we forecast in 9 months' time, the salaries weekly, monthly, and around that. And because you could quite easily have an issue 2 weeks after an event where you've got to pay everyone and you don't have enough money because you're not making any money. And one thing I will tell every owner is there will be times, if there are times you need any type of funding, we can always get it for you, but if you have enough time to plan, like 6 months, 3 months, it's hard. And I have got clients who I'm new to, and they say I haven't got enough money for the payroll on Friday. And there may be people on the call who have similar experiences. Yeah, we can do something, but if you plan it and be anal about it and detailed, you can run all the business around it. So plan for the worst, and if you've got enough time, we can come up with solutions. And those solutions are as simple as an overdraft with a bank, asset finance if you have to buy assets, loans, and certain things like that, but not the expensive shark loans that people get enticed to do. So with time, we can plan it and help you. So that's the seasonality. And the other thing Helen touched on is what I call reserves or ring-fenced money. Because through COVID, I'm ashamed to say it that we had a lot of money and had started spending it. COVID hit, and everyone wants their money back. And it was the same with British Airways, the same with every music festival, the same with and if you haven't got that money to give back, and this was a black swan moment that God bless never happens again, but it might. And I learned from that is keep enough reserves to if you have to pay any money back or pay your salaries if there aren't furlough advances from the government and stuff. So always, I think Helen said it earlier, she said 6 to 12 months. I always look at least sort of 3 to 6 months monthly overheads tucked away in reserves. And a lot of people on the call might go, oh, that's impossible. I think it's something you should work towards. And each month, put it in a savings account and build towards a 3 to 6 month reserve, whatever you want to call it, for that black swan moment. And several of my clients now we're looking at potential acquisitions or potential use of that money. And if you've got those reserves and you can tap into them and then build them back up again. And again, but this all comes from the boring spreadsheet of monthly cash flows, or weekly cash flows, or I have done daily cash flows or hourly cash flows in emergency. And during COVID, we were doing half-day cash flows. So that's the extreme, and that covers seasonality and that black swan moment, Andy. And obviously, aside to that, if people want asset financing, sort of the overdraft, and also the HMRC, I wouldn't advise it, but a lot of clients and people probably listening to this do use the HMRC as a bank. Now, I'm not recommending that, but it is an option. But I would always advise you pick up the phone and talk to them. And they are very reasonable, and you do stick to what you say you're going to do. But it is also an option of managing cash. I wouldn't advise it, but if you need to pick up the phone, or we do it for you, and you can manage that because it is manageable. The worst thing you can do is stick your head in the sand and forget you've got a problem because there's always solutions. So I would just advise, that detailed cash management ahead of anything, and then you worry about or work on the strategy of the company, growing the company. But that solid base of cash flow management, as Helen said, is what makes survival and then growth.
Fabulous. So some great things coming out of what Justin's saying there. Let's just have a quick recap on a couple of them. It certainly seems like the devil is in the detail, Justin. It's like, I've met lots of entrepreneurs that have managed their business in the early days just by looking at the bank balance. It's like, it's fine. I don't need to plan for it. But then when you get into anything that changes that early routine, particularly growth, that sucks in working capital, doesn't it? Really, that working capital cycle, if you don't plan it, that's where you end up with lots of orders, lots of potential profit, and actually nothing to pay to buy the stock in the first place. So the devil's in the detail, I guess. Whatever you use, whether it's Excel or something a bit snazzier, you've got to get into the line by line, really, because it's so crucial. And I've met businesses, that even get their 3 month rolling cash flow, but actually usually the reason why Justin's talking about keeping it up to date is that once the ink's dry, and something comes left of field slightly, it just ripples through the whole thing, doesn't it? It's like you've just
Yeah.
got to keep on top of it and keep it rolling, really.
Yeah.
Seasonality, obviously a really big issue for some businesses, and that it's not just things like the ticket sales. I guess if you're buying large sort of stocks from overseas in big lumpy, literally containers, that's often up front, of course, isn't it? And it's like such a big drain if you've not got the mechanism. So I think that's all really good stuff, really. Devil's in the detail. Really understand your business. One thing I want to talk to you about, maybe Helen and Justin, what I've found often in the past is when we meet a new client, we work with somebody, and actually the answer might just be a bank loan or a bit of extra funding. But the client will often turn around and say, well, the bank doesn't understand me. They've no time for it. It doesn't tick all the boxes. They don't get me as a business. Do you find that being by their side as a CFO adds a different layer of credibility to sort of the numbers and things you produce?
Yes, absolutely. Yes. Just the credibility of having somebody like us looking through your numbers and sort of say and presenting it just adds an extra sort of like a approval level for a bank, etc. I worked with a business recently that looked really profitable on paper, but it was completely handcuffed by debt. That over 9 different high interest loans, including informal ones from friends and family, but some of them were like 60% interest rate. And they're losing sleep over how do I manage it all. So you would just quickly and simply create like a simple loan tracker with all of those interest rates, monthly payments, all the repayment terms, any covenants, and then we as CFOs would actually bring someone in, a trusted finance broker that we would negotiate some kind of debt consolidation facility with.
Mm, mm,
So you can turn those 9 separate loans into one structured loan with a lower monthly repayment. So that's something that CFO could do for you. And I did that for a recent client, and we built a brand new repayment schedule. We put that straight into cash flow forecast. And now, I think the monthly repayments dropped by something like 35%. The founder got their headspace back, and they sort of can start to plan and breathe again. But yeah, because I had done that work, that piece of work, and then brought the right person in, everything worked. But if they'd probably just gone to a bank with that kind of look of 9 high interest rate, they would have not got anywhere.
yeah,
Think,
yeah,
Andy, what I've learned from it, and again, having joined the CFO Centre 2, 3 years ago now, having I knew a few banks and a few funders, having access to people who had access to 500 lenders with one phone call. And that's not me trying to sell it. It just helped me. And I did the similar to Helen. I had a client who had some crazy loans, but 18, 20%. So just refinancing that or finding new loans with sensible professional funding, people, banks, private funding. Like I said earlier, if you plan for it and you've got time and do it patiently, there's money out there at sensible rates or ways of funding cash flows. It's just having that credibility and time and focus on it. I make every client go through cash once a week, even if it's 10 minutes. And they hated it at first, but now they feel comfortable because
mm,
they know what they know about the cash, as opposed to before they just thought they had loads of cash because they looked at the bank statement or they were making profit and couldn't work out why they had no cash.
yeah. Where is it? Yeah.
Yeah.
Have you done a debt consolidation as well, Justin, in terms of like somebody who's got, typically when the business grows,
Mm.
obviously it's keen to don't want to miss the business. So we get a loan here and then a loan there. And often we end up with 4 or 5 different things at varying rates of interest and everything. And it's a bit like, oh, it's just like even understanding what you've got is difficult. Have you done that similar exercise to
Yeah,
help?
exactly same as Helen, and a lot was hanging over from COVID clients. Had some one client had 3 debt lines which were over 15% each.
Mm,
So consolidation of those and basically improved his cash flow overnight by sort of 5, 6 thousand pounds a month interest, what I call shark interest. These
Mm.
payday loans. So, but having the credibility, having the information, and then to go to respectable lenders who with that credible information, with the client alongside me if need be, because they know the business. They know the business better than Helen and I, as in what they sell, what they do. You guys, the clients know that. We get to know it, but having that credibility and that detail, and I wouldn't present something that I didn't believe in. So yeah, just done quite a bit of that kind of consolidation.
Yeah, fabulous. Helen, any closing comments for you?
I'm exactly the same as Justin. It's all in the detail, and you must keep yourself on top of it. And like you, Justin, I've done the same with like weekly cash flow, and they do start to enjoy it in the end. Like, so who we're paying today?
There you go. You can enjoy cash flow. There's the message.
Exactly. Exactly.
Well, look, we've got to time. It was deliberately short and snappy today. We've covered some key themes, but of course, every business, every situation is unique, and really does need that tailored approach because everybody's flows are sort of different. We did promise you a checklist, which we'll send out after today's event, which will give you a lot more detail as well. But please do get in touch if you want a personal discussion about your business, because like I say, everything is unique and everything should be tailored really. Any solution that sort of says promises off-the-shelf solution overnight usually is forgetting that detail. So massively important. So massive thank you to everybody. Helen and Justin, thank you for your time. I see we've got a question come through. I will get that question answered for you individually. So we'll keep to time today, but we will get that question answered. And if anybody else has got any questions, you can still send us through afterwards. We'll come back to you individually. Thank you, everybody. Good luck with the cash flow. Don't let it control you. Take control of it. Thank you very much.
Thank you.
Cheers. Goodbye.
Bye.